Welcome to another S&P 500 analysis. Today is March 12, 2022. The S&P 500 continues to wind down and the market continues to put up lies to fool those that are uninformed. Next week, everyone are expecting the Fed to hike the interest rate, and it should not be a surprise to anyone. The market has already priced in the expected 25 basis point. In this video, I will share with you what the market might be pricing in next, so you will not be surprised. We will also look at the market sentiment, the internals, and the price action of the indexes and see what they are telling us. In addition, we will analyze the 10-year yield, oil, gold, the ETF for the S&P 500, the ETF for the Nasdaq 100, and the ETF for the Russell 2000. Stay tuned. Okay, before I begin, I need you to take a moment and click that thumbs up to help me promote this video on YouTube. Now, let's start with the weekly chart of the S&P 500. For the week, the S&P 500 lost 124 points, or 2.88%, had a range of 169 points. It has also reverted back down to one-time framing down and closed below this declining 10-week moving average and also the 40-week moving average. In addition to that, the declining 10-week moving average crossed under the 40-week moving average. So all these technical is indicating the weekly trend is down. Next is this sentiment chart. Now, for those that are unfamiliar with these market-generated information that I'm about to review with you, then go watch my video on 7 key market indicators, where I explain what each one of these indicators represent. I have posted a link in the description below. And as far as I know, this is the only channel on YouTube that reviews the genuine market-generated internals and the sentiment, not those that have been derived or distorted by some mathematical mumbo-jumbo. So if you are serious on monitoring what the market is telling you and to get an unbiased view on the market, then click the subscribe to this channel. Here on the VIX, it's been above this 30 level for the last 10 sessions. Clearly, the market participants are getting fearful. Also, we see the put-call ratio have been up at this 0.75 level since February the 10th, and the market participants are in a risk-off mode and putting on hedges. So keep an eye on the VIX to spike up above 40. We saw a 36 plus on March the 7th, and the put-call ratio to surge above 1, which we saw on February the 18th. When these two sentiments spike, that's when the market will make its move to force the weak hand to capitulate. Looking at the internal, first the up-down volume ratio. We saw an increase in selling on Friday as the up-down volume ratio closed at 4.7 to 1. In favor of the down volume. We still are not seeing panic selling yet. And the advanced decline is showing a broad-based participation on the downside. On Monday's sell-off, there were 1,990 more declining stock than advancing stock, and on Friday, it was 1,515 more decliners. The new high, new low is showing the number of new 52-week low is dominating the number of new 52-week high once again. The number of 52-week low is starting to creep back up. And here's the tail. We're seeing the New York Stock Exchange cumulative AD line making a lower low while the S&P 500 closed above the previous low. And this set up a negative divergence. And what this tells us is that we should expect the S&P 500 to close at a lower low to resolve this negative divergence. Now let's see what the Nasdaq internal is telling us. The up-down volume ratio been in the 2 to 1 range on the sell-offs in favor of the down volume. So that indicates the selling is pretty orderly because we are not seeing massive sell-off such as 4 to 1, 6 to 1, 8 to 1, or even 10 to 1. But the advanced decline is showing a broad-based participation on the sell-off. You see on Monday here, we are noticing there's over 2,300 more declining issue than advancing issue. Likewise, on Friday, it was 2,117. And also in the Nasdaq market, we are seeing that the new 52-week low is dominating the number of new 52-week high. And just like the New York Stock Exchange, the Nasdaq market, the cumulative AD line also put in a lower low while the Nasdaq 100 closed at above the previous low. So again, just like we are expecting the S&P 500 to close at a lower low, we are also looking at the Nasdaq 100 to close at a lower low to resolve this negative divergence. So just to summarize what the internals are telling us, they are saying to expect more downside. Capitulation has not occurred yet. Look toward increasing level of fear and watch for the market participant to start building downside position when the put-call ratio move above 1. Now let's see what the index price action is telling us where they might be headed. First, looking at this daily chart of the S&P 500, as you can see, I have a Fibonacci retracement on the swing here. And we saw that it came up to this 38.2, and right now on Monday it broke below the 618, and it's been attempting to try to get back above it a couple times. So on Friday it one last ditch, it appeared to try to come up to the 618, and it failed. So right now we're basically looking for this thing to come down and break this 4,114 level, essentially the February 24 low. If it take out this low, then we're looking for this thing to come down to this 127 extension, somewhere around 4,000. And that is in confluence with these right here, this little bit of a breakout point here back in April of last year. Now, if the S&P 500 could get back above this 318, this 382, then essentially we are looking for this to come back up and test this 45.45. This pivot high here, but still in order to break this downtrend, it has to get above this pivot high somewhere around 4,600 level. And as of Friday, the S&P 500 essentially have lost 12.72% from its all-time high back here, made on January the 4th, 2022. So it is still in the correction territory. Looking at the daily chart of the Nasdaq 100, as you can see, I also have a Fibonacci retracement set up on this swing, and this is the retracement zone. We saw the previous Friday it broke below the 618, and it continued to stay below the 618 level. And right now, I'm basically watching for it to break this 13,000 level, essentially the February low. If it take out this low, I'm looking for this thing to work its way down to this 141 extension somewhere near this 12,200 area, and that basically in confluence with the resistance turn support area here near this 12,183. And also, as you can see, as of Friday's close, it is in a bear market territory. It has lost 20.66% from its all-time high back here, made on November of 2021. And here looking at the daily chart of the Russell 2000, as you can see, the Russell 2000 got back just slightly above the bear market territory, and it is at the tail end of the correction territory. It lost a little bit over 19.5% from its high back here. And essentially right now, I am looking for this thing to continue to break. And if it breaks below this 1935, I'm looking for this thing to trace out down to this 1725 area. Remember, there is this pivot high here, and also this little bit of a support area, and we test this level at 1725 area. And for the Dow Jones Transportation, it is bumping up against this trend line here. And also, again, I have a Fibonacci retracement set up on this swing, and here's the retracement zone. So right now, it's still kind of bouncing around on this retracement zone, and it break below and move down to this 14,133. Essentially, this area here, if we break this support here, now I'm looking for it to come down to this 141 extension at 13,100 area, and that is essentially come down to test this level here. And the transportation is in the correction territory. It's down 16.5% or so from its all-time high here. And for the Dow Jones Industrial from this daily chart here, we're noticing that it is in the correction territory. It's down slightly under 11% from its all-time high. And also I have a Fibonacci retracement set up on this swing, and this is the retracement zone. So right now, basically looking for this 32,300 area. If it break this, then the first level support will be the 32,000, and that is this area here. And if we break this, then we're expectedly looking for this 200% retracement down to this gap here near the 29,000 level, and that would put it in a bear market territory. Now, looking at the New York Stock Exchange Composite, it was trying to get back into this balance area, but unable to do so because on Monday it broke down from it again. So right now we're essentially looking at it still inside above the correction territory just by a slight margin, because it only lost 9.73% from its all-time high here. So if it continue to break and move below this 15,775 and take out this February low, then we're essentially looking for a 100% retracement on the downside of this of this range here, and that will bring it down to somewhere around 15,223. And essentially, coming down to these area here, this level here at this 15,140 area for potential support. Looking at this daily chart of the 10-year yield, we see that it came down from a little bit over 2% and down dipped below this 1.7%. Now it is moving back up to this 2% level. And on the weekly chart, remember I was talking about two possible cup and handle pattern here. One is this cup and handle, and this move here, the projected move is up at this 618 at 2.5%. Then we also saw a smaller cup and handle here. We are projecting the move, and from this breakout level, we're looking at this smaller cup and handle at 2.4%. So we're essentially looking somewhere around this 2.5% target level for the 10-year yield. Looking at the US dollar, last week we saw it came down to this 97.79. But it got a nice bounce off of it. Essentially, it came down and back test this breakout from this zone here. Right now, it's back inside of this 98.80 to 101 zone. So we're basically watching to see would it continue to move up to this 101 level. Last week, we saw crude oil came up to this 130 level and then kind of got a little bit of a reversal sell-off here. So right now, we're essentially keeping an eye on it to see would it retrace back down to this $90 area to find support. Because this right here, this high here represent this level here, these these high that the last time we saw this level was somewhere around 2014. So we'll see would it be able to continue to push beyond this 130 and make it back up to somewhere around this 138 and possibly up at this 140 level. But right now we might get a little bit of a profit taking a reversal and pull back to somewhere around at least to this area here at this 104. I'm looking at this area here. So it could be looking a slight pullback and test this 104 because we saw that last week here. And if I zoom this back in here, right, so essentially came down to this 103.61 last week and popped back up to 109. So we'll see what just kind of bounce around, chop around that 104 before it make another push up to this 130 or continue to come down and test this $90 area. So definitely I wouldn't be chasing the oil down here right now. Just wait for a little bit of a setup to see would it go back up or a little bit more pull back to this 90 level. And looking at this silver also had a nice surge last week, and then we got a little bit of a reversal here. You see this these two candles kind of set up a little bit of a pattern such as this right here. So it's kind of like a Greystone Doji. add these two candles together, that's basically what you get. So we'll see what it come down and retest this 25 area here. It did take out our resistance level here, or one of our target levels, 2667. But we're basically looking for this thing to come up here at this 29.5. And we still might see that after it pull back a little bit, consolidate, because right now it's essentially coming down and back testing this breakout level. Okay, so if it hold above this level, then we could see if it could come up and take out at least this 1x extension on this particular balance area at 28.43. And if we could take that out, then we're essentially looking at this 29.50. And looking at gold, gold also had a nice surge, and similarly, it also had a reversal here after it surged above that 2050 level here at this 2070 area. You see this this pullback here. These two candles also set up to be a equivalent of this type of a candle, right? Okay, although it got a little bit bigger body here. If you add this up, and you're essentially looking at this type of a candle here. So we'll see, would it come back down and retest this 1923 level and then get another push back up, because that's basically is the little bit of a breakout area to make this surge up to above the 2000 level. All right, let's take a look at the ETF for the S&P 500, the SPY. Right here, it's basically trying to hold at this 420 level. Now, next week, if it breaks below this 420 level, watch that 418. Because I'm looking for this February 24 low to get taken out. And if it does, then we're basically looking for the SPY to move toward the 400 level. Now, for the upside, if it could take out this 427.25 here, watch for this 430. Then if it get above this 430, essentially will move above this trend line here, then I'd be looking at these level up here, somewhere around this between 439 and 441. And looking at the QQQ, the ETF for the Nasdaq 100, looking at this February 24 low here at 318.26. I'm watching to see it will come down and take out this low. Now on the upside, if we could get above this 334, then watch for this trend line. Have a composite profile for this entire range here. There is this point of control here at 344.20 for this composite profile. So we'll be watching to see would it get up to this level here if we break this trend line. But right now I'm basically keying off of this February 24 low. And for the Russell 2000 ETF, the IWM, looking at these level down here at this 191.94, essentially 192, and also this 188, these low down here. Now I have this composite profile, and the point of control is near this 201. So essentially right now, I'm watching to see would it be able to come back up and take out this point of control and move up to this 204 here, and possibly get up to the this value area high at 206.35. But on the downside, I'm watching to see will it break this value area low at 193.53 area and come down to this 192 or this 188. So essentially, I'm looking at this balance area here. So if it break below this balance area, then I'm looking for this 188. And if I could get above this point of control, then I'm essentially watching for these upper edge of this balance area, or this value, composite value area 206. Now let's take a look at the ES, the E-mini S&P 500 future. On this market profile chart here, as you can see on Friday's session, we have a few of these single print region that needed to be filled in the coming week. Is if it come down, we will look at this poor low here, right? This poor low that was left behind on March 8th, and we'll take at this poor low. And once this poor low is taken care of, and if it come down and take out this February 24 low, then look for this point of control from May 19 at 4091.75 to get tagged and possibly go lower, and that will take out these 4 low on the 19 as well. Now, if I shift this up, we see there are quite a few of these unfinished business left behind in the month of April and also March. So we could see substantial downside if this low get taken out. The February 24th low get taken out. We'll come down and check these, this level somewhere around this 4,000 area. In summary, the S&P 500 is back in the correction territory. The internals are indicating more downside to come. The cumulative AD line from the New York Stock Exchange and the Nasdaq are showing negative divergence, telling us to expect a lower low close from these indexes. Next week, FOMC rate hike announcement will likely be 0.25% as expected. And once this rate hike is made, the market will start pricing in the next rate hike. And in my opinion, it will likely be greater than 0.25%. And here's my thinking on why it will likely be greater than 25 basis points for the next hike. Now, this is purely my opinion, and I could be totally off base. But here is my reasoning. After next week's rate hike of 20 basis points, it will reinforce the market's belief the Fed is not moving quick enough to hike rate high enough to slow down inflation. And it believes the Fed will be forced to make a hike in the 50 basis point range or higher in future rate hike to chase after the rampant inflation. Yes, the current Ukraine crisis gave the Fed an excuse to hold back on the amount of rate hike, and this will only make the Fed fall further behind the curve and will need to react more drastically once the Ukraine crisis is no longer at the center stage. Also, since it is the year of a midterm election in the US, inflation or the American pocketbook always is the primary issue in any US election. For that, I am preparing for more downside until the market tells me otherwise. A final note, I have also released a second video on my volume profile series. In this video, I discuss some volume profile trading strategy and setup. Go check it out. I have placed a link in this video in the description. I hope you find this video to be informative and be sure to click the thumbs up to help promote this video. Thank you for watching and stay safe.